Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. You are watching Trading Hour, and right now let's just quickly head across to Lata, who I think is in conversation with the NITI Aayog Vice Chairman. Let's go back to the Motilal Oswal conference.
I have with me the person who will be able to answer a lot of questions on the economy. Not that the economy is in any trouble and that we have too many worried questions on it, but yet we have Mr. Rajiv Kumar with us. Mr. Kumar, let me start with the problems simply because they are more interesting. The rupee depreciation. Personally, of course, most countries welcome depreciation of their currency because that is healthy for the economy. Imports become expensive. Is there any spot of worry at all? You are happy that it's depreciated in the way in which it has?
Yes, because it has not been very volatile. And as you said, and I've said it often enough, that I'm not worried if it finds its natural level. And it had been over-appreciated in the past, and so it's coming down towards its natural level without much volatility and without any fear of a free fall, which we had in 2013. And I think that's the critical one. So as long as it is a sort of, it's a regular, if you like, in some sense, managed, sort of a move, I'm not worried one bit. I'm in fact very much against this whole notion that a strong rupee means a strong country or a strong economy. I think they're just completely outdated. And the sooner all of us get out of that mental frame, the better off we would be, as you said yourself.
So you are the kind of the economic teacher in the government. Is the government behind this view that we should not identify a strong rupee with a strong economy? Is that fairly well understood?
I think so. I think the government very much so. Perhaps, and I'm now risking a little bit of a conjecture, may not be in its supportive or affiliate organizations. Okay. But that's neither here nor there. But the government, I think, is very clear in its mind that a rupee which is closer to its natural value will encourage and help exports, will discourage imports, will improve our trade balance, and prevent an external account, distress coming our way. And I think this is the best way to also capture our inefficiencies in the infrastructure or transaction costs, etc. The government is very much behind.
Okay. So now I wanted to come to the problem which the rupee should address, which is the current account or the trade deficit. Now we've seen a rising trade deficit, and the July trade deficit, which came a few days back at 18.02 billion, was, a little scary. It's, besides being just calling it a 62-month high, if you pro rata go with 18 billion, then we are ending up with over 3% current account deficit. How is the government addressing that?
Yeah, so the first thing though is that yes, it doesn't permit any complacency. However, one way of addressing it, which is to clamp down on the economy and in some sense tighten everything and bring down the rate of growth, is perhaps also not acceptable, because that could have been done, but I think it's not yet time for that. So we're not in a sort of that kind of crisis.
We don't have to hike rates to cool the economy.
Not hike all rates and cut expenditure and basically sort of what is the word? Contract the economy.
Okay.
I think that's not contract economic activity. I think that's not yet called for. Remember, we've had don't want it 6% current account deficit in the past. So therefore it's not yet there in any sense.
No.
So what is the other alternative? Because imports will rise if economic activity increases. So the only way, and which is where the government is, I think, very sharply focused on, especially the Department of Commerce, is on raising your exports. And it's raising your exports, both goods and services. And I think the services exports are beginning to see a newer momentum despite what's happened in the US. So I think that's the place to have even a sharper focus to the exclusion of everything else. Second part, of course, is to also improve your capital flows so that you can finance the deficit that you have. We've got about 70 billion and we can ramp up that even more and hopefully more equity than debt flows.
Okay, welcome back. I mean, this news at the bottom of the screen, this is ICICI Bank, which has told the NCLT about a settlement with Punj Lloyd. I mean, actually, from what I can make out, the amount is about a little over 800 odd crores or so. I mean, that is essentially the amount for which ICICI Bank had moved the NCLT against Punj Lloyd. And now they have sort of managed to settle it between the lender and the creditor, the lender and the party which had taken the loan. So that's what they said. So the impact actually is not so much on ICICI. 800 crores plus, I mean, for ICICI Bank, it's not that big a deal in the larger scheme of things. But for Punj Lloyd, I mean, that's a stock to watch out for. I think I would suspect ICICI would have been doing well anyway. But Punj Lloyd is up 7 or 8%, and that's a sharp spike up. 15 rupees or so is what Punj Lloyd is trading at. I think, Rupee, the import of this is that you go to NCLT, but there is still time for you to resolve. It's not as if when we say, you know, NCLT has become this, almost this word which is used interchangeably with
liquidation.
Doom, liquidation. But those are very different things. Yeah. You go to NCLT, the NCLT sends a notice to the company involved on behalf of the creditor saying, well, this is the due, what you have to say. And then the company may say and initiate talks with the creditor and sort of try and find a settlement. Or they may have an agreement in place beforehand. And because of some deadlines being missed, the case goes to NCLT. And at the NCLT, both parties, if they agree with a settlement, I mean, it can be approved by the NCLT. So I think that is the broader sort of sense on this one. But we should nevertheless try and have the Punj Lloyd management to speak with us on this one. Yeah.
So, Prashant, here this was an interesting case because, as you're mentioning, I think ICICI's exposure was only some 820 odd crores. There were other lenders involved, and it seems that it was actually State Bank of India that was not too much in favor of taking Punj Lloyd to NCLT. They were in favor of looking at a restructuring arrangement, and it seems that if ICICI is on board, then that happens. Also, this is important because then we're not talking liquidation, the IBC getting invoked straight away. It's a 14 rupee stock. So then, I mean, if indeed the debt can be sort of put back on track.
The other case is parallel is Jayaprakash.
Absolutely.
Right? Now, that is a huge one. The lender, there was a master agreement in place in 2017. Because of various deadlines being missed, etc. I mean, the NCLT approval for one tranche of that transaction has not come through. But you know, the RBI is now, we reported, Ritu, our colleague, reported the RBI is telling ICICI Bank, please take, which is the lead banker in the case, to take JP to NCLT. At the NCLT, can they find an agreement and they tell the NCLT, well, we've reached an agreement? It's possible. So we don't know. But it's not necessary that everything which goes to the NCLT has to go through the IBC process. I mean, it doesn't have to get to the point where an RP is appointed and then, I mean, the process starts in that sense. Okay, let's quickly bring in Rahul Singh, who's managing partner at Ampersand Capital Investment Advisors. He's with us on the show. Rahul, thanks very much. Appreciate you joining in. Sorry to have kept you waiting. First up, your sense on the markets, Rahul, your broad view. Are you comfortable with these market levels, or you think maybe the run-ups have been a bit too sharp?
Well, the run-up definitely has been sharp, but I think beyond the overall market level, one has to look at what's happening below the surface, in the sense that it has become a winners-take-all kind of a market that you see either the market leaders or where the management perception is extremely positive. Those stocks have actually gone up much faster than the rest of the market. So what we are seeing now is that, as I said, the winners have walked away with most of the valuation upside which the market has seen. But we see value emerging in the bottom of the barrel, so to say, because there has been a significant price as well as time correction over the last 7-8 months. So there is some space building up. There is definitely some interest which is now going to come to the ignored sectors or ignored companies which also have delivered numbers. So to that extent, I think the our portfolio as well as our advice would be to have a bit of both in the portfolio. So beyond the overall Sensex level or the headline Nifty level, I think that is where the the alpha is going to come from.
Rahul, obviously the hottest sort of theme in the market last couple of weeks has been this resolution of NPAs and whether it's the end of the trouble cycle for even, some of the larger corporate banks, and whether now some money will come back because of the recovery process in the NCLT. How do you see stocks like Axis Bank, ICICI Bank or even SBI, which have already rallied from the bottom?
Yes, they have rallied, but I think if you look at their last 5-year performance, if things turn out in a positive sense, then there is still a long catch-up to do. Because all these banks, I mean primarily Axis and ICICI and to some extent SBI, they have been growing their retail book. So if one were to just look at the retail book and give them the valuation and give a discount to the corporate book, I'm pretty sure that there would still be some upside left even from these levels. More importantly, I think in the NCLT process, what we have seen is there are 3 buckets of NPAs: the metals and mining kind of segment, followed by power, and then the EPC. So what we have seen is the easy ones going into NCLT 1 and NCLT 2. And the tough ones where the bulk of the NPAs are. So once the resolution starts there, I think there will be more confidence on the NCLT 2 and maybe the NCLT 3 list, which will come out after today. So the corporate banks definitely from a 1 to 2 year perspective look interesting. I think in the immediate term, stocks have moved for various reasons. Axis Bank maybe because of the management change, rumored management change, and in ICICI because of these one-off kind of resolutions which you were just mentioning before. But I think if you take a more structural 1 to 2 year view on these names, there is a potential for them to surprise on the valuations once the NCLT resolution process gathers more steam. To be fair, the NCLT resolution process has been much slower and has been mired with a lot of bids and counter bids, so nothing major has happened, but the process is on, and I think that is where the market is deriving confidence from.
Rahul, talk about one theme that you are most bullish on.
Sorry?
One theme, a bunch of stocks or sector which you are most bullish on.
Well, I think the IT services space definitely looks interesting because it has tailwinds for the sector, and it's just not a currency play according to us. There is a definite amount of increase in the deals which are there out to be won. There are companies which are making a huge bid in terms of gaining market share in those deal wins. So apart from the currency, which obviously lifts the earnings in FY19 and FY20, I think the headline dollar revenue growth also still continues to look good. I know the sector has done well and the stocks have done well, but if you look at in the overall context of the valuations where the the rest of the leader pack has gone in other sectors, IT services valuations have still not reached anywhere close to those levels. So that's one segment clearly we see as has still some way to go.
Okay, Rahul, we'll leave it on that note. Thank you very much for joining in with your perspective on the market. We need to take a very quick break. We'll come back and take a look at how things are moving. It's still all green and it's up, up and away. Metals, Reliance, all kinds of stocks on the move, but we're not going to talk about the market just now. There's an important story to track as well. Sources are telling us that GHCL is looking to sell its textile business. Utkarsh has all the details. Utkarsh, fill us in.
So as you said, what we are picking up from our sources is that GHCL at this point of time is looking to sell the textile business. In fact, Motilal Oswal has been given the mandate to go ahead and get the job done. Now, the reason behind it is very simple, that if you look at the company's business, company wants to focus on the soda ash business. It has, in fact, the company has additional capacities which are going to come in soda ash business plan and are going as per the plan. But on the textile division, the numbers have been a drag for the company, and now the company wants to really get rid of the textile division and focus on one profitable entity. If you look at the textile numbers, in fact, last quarter the revenues went down 15% to 265 crores. More importantly, it's the impact on EBIT. You will see the textile EBITs were down 71% last year, YOY last quarter, to around 6.62 crore rupees. So this is what the company is really looking at. The company is aiming to get rid of the textile division so they can focus on the most profitable area. Now, when we spoke to the company for a comment, GHCL said that the company categorically denies any such development, but any conjecture with regard to the future of the textile business is speculative and any inference is hypothetical.
Okay, all right, Utkarsh. Thanks for getting us that story. We're completely out of time on this edition of Trading Hour. Stay tuned. Halftime report coming up next.